Palantir is scheduled to report quarterly financial results after the stock markets close in the United States on Monday, May 5th, 2025. That has investors asking if they should buy Palantir stock before the company announces earnings. I'll answer that question in this video. I'll also preview what investors should look for when this company reports its earnings results. I'll also share with you my proprietary discounted cash flow valuation that reveals my intrinsic value calculation for Palantir stock. In other words, it reveals what I believe it's a fair value for this business today. I'll do all of that in this brief video, so let's get started.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So Palantir's business has been on fire the past, 8 quarters or so. Revenue growth is accelerating. Profits are expanding. The company has delivered profits on the bottom line for several consecutive quarters now, where for almost 2 decades, it hadn't reached profitability. One of the drivers of this growth for Palantir has been its expansion into enterprises, which I'll discuss in a little bit. U.S. revenue in the most recent quarter grew by 52% year over year to $558 million. Commercial revenue grew by 64% year over year and 20% from the previous quarter to $214 million. Government revenue increased by 45% year over year to $343 million. But what's impressed me is now the ratio between commercial revenue and government revenue is improving dramatically. And this is the area where I feel Palantir has the greatest opportunity. There's a limited amount of governments worldwide, and there's a limited amount that governments can spend annually. So by expanding into businesses, Palantir opens up a much larger opportunity. Additionally, Palantir closed a record-setting $803 million of U.S. commercial total contract value, which was up 134% year over year. The remaining deal value of U.S. commercial businesses totaled $1.8 billion, which is up by 99% year over year. These are remarkable numbers for Palantir, and these are accelerations in these numbers, meaning the second derivative is increasing, which is an important metric when investors are evaluating the business because it shows organic demand for a company's services is expanding. Not only is the company growing revenue, but the rate of growth is increasing. That means demand is increasing significantly for this business. And you can understand why. It's the best AI company that delivers enterprises intelligence based on their proprietary data. This is the kind of AI that I find to be most valuable for enterprises, is data that's proprietary and then using AI to gain insights from your own data. Not everyone can afford this. And that's why I said that the expansion into enterprises is a big deal for Palantir because it's found a way to make its services more accessible to businesses that are not generating as much revenue. And so if it can continue to expand that, it opens the door to so many more businesses that would be interested in its services. I would be interested in Palantir services for my own business, but I don't think I can afford it. If I'm wrong, reach out to me, representatives from Palantir. I would love to use the data in my business to be able to gain insights so that I can make decisions based on those insights. It would be extremely helpful. You generate data all over the place through the course of business, and there's so much data, it's hard to evaluate all these pieces of information to derive insights that help with decision making, that improves value for customers, or reduces cost for the business. This is an important thing for every business in the world. It's just a matter of Palantir being able to lower its cost to serve these businesses so that it becomes affordable. Even if Palantir is a no-brainer, right? Even if, let's say, you 100% agree that if you spend $5 million with Palantir, they will help you make $15 million. It's a no-brainer. You're convinced of that fact. But you have no way of getting $5 million to pay for Palantir services. It's out of reach for your business. But if Palantir can lower its cost to serve and make it more accessible to more enterprises, the revenue growth will expand and will do so for many, many years in the future. Okay, so the one thing that I want to hear from Palantir's management team in the upcoming earnings release is a discussion about how its business is getting impacted in the early days following the tariff announcements. What Palantir is seeing in terms of its customer discussions. Are its customers pausing discussions and saying, we're going to delay signing with you until we have more certainty about our business? Or are they more encouraged to sign with you because of all of this uncertainty? The demand for Palantir services is increasing because customers are panicking about how they're going to deal with tariffs. They don't know what they're going to do, and so they want Palantir to come help them decide a strategy moving forward. So if you hear that from Palantir's management team, that demand for their services are increasing as a result of the tariffs, boy, that's going to be great to hear, because that means the company is positively impacted by this uncertainty. And this uncertainty seems like it's here to stay because these tariffs are on again, off again, increasing, decreasing, paused, expanded, etc. And so with all of these changes, businesses face uncertainty. They don't know what to do. And so they need help with their operations. And it would be great to hear if Palantir is benefiting from those developments. All right, so now let's look at valuation. I talked about what a great business Palantir is. Unfortunately, that's no secret. Nearly everybody knows about how great of a business Palantir is, and they're willing to pay up for it. The fair value I calculated for Palantir's business is around $24 per share, but the current market price is almost $94 per share. And you can see this with widespread enthusiasm for Palantir stock. Nearly every investor is a bull on Palantir. It's in the right business at the right time. It's under great management. It's doing a great job in executing. Nearly everything is working in its favor, but it's no secret to investors. That's the trouble, is that the price, I would agree that it should trade at a premium price because it's a premium business. But when I look at the next 12-month or 1 year ahead forward price to earnings ratio, it's at 169, a forward PE of 169. And by the way, I'm looking at this on FinChat. So that's a super premium valuation, one that I think is beyond what the business earned so far. They earn a premium valuation, but not this super duper premium valuation where I feel the shares are incorporating too much enthusiasm for the business. And so since the share price is so expensive already, I don't see any reason why investors need to get ahead of themselves and buy the stock before earnings, where if the company says something that investors and the market doesn't like, it could fall by 20 or 30%. And I don't think that would surprise anyone given its already lofty valuation. So this is a situation where I would prefer to wait until after earnings come out, digest the results, look at the new valuation, and if you're adamant about owning Palantir shares then, and you're willing to pay that super premium valuation, at least do so after the company announces earnings, because that tends to be an extra volatile event and you're taking extra risk by buying the stock ahead of earnings. And since the valuation is already so expensive, the upside is more limited than the downside here, in my opinion. So that's what I would do. Wait until after earnings and then make a decision about Palantir stock. Hey everyone, we've got some exciting news to announce. We launched a private Discord exclusively for our channel members at the VIP Discord tier. It's your backstage pass to ask questions, share insights, and get direct access to me. Don't miss your chance. Limited spots available, so join now.